Millions of Australians who invest in the share market, like Liam Walsh, are crunching the numbers from the government's tax reforms. He owns $3 million of high-growth stocks.
I'm looking for some tissues to cry into because nearly all of my income that I derive comes from capital growth.
From July next year, the government will scrap the 50% tax discount on capital gains for all assets except those in superannuation and some trusts. In its place, a return to 1999, where only real gains above inflation are taxed at a minimum rate of 30%. But gains accrued prior to next year will retain the 50% discount.
I actually support the policy. I think it's a really good policy. It sucks for me because I'm going to lose money.
We're discriminating against growth assets, that asset class that generates the biggest gains for economies through time.
Not all investors will be worse off under the changes. Those with gains well ahead of inflation will pay more, while those tracking closer to it will fork out less.
I think that the changes could be pretty far-reaching and they could have much wider consequences than people are potentially expecting.
Investment fund founder Chris Brycki worries the changes will hurt aspiring homeowners who are buying speculative shares to save for a deposit.
And that's still possible in a diversified portfolio. It just becomes a little bit less appealing, and potentially the lower risk investment options that we offer will become more popular because they have more government bonds and lower risk investments which are hit less by this new tax.
The capital gains tax changes also apply to property investors, except those buying new homes, to boost supply.
A major or drastic move like that can obviously, there'll be a ripple effect.
From next July, negative gearing is limited to new properties. Existing investments are grandfathered, except those bought after tonight. Property prices are expected to slow.
I do think that we will see an exodus of investors.
And Domain's Nicola Powell worries renters could suffer.
We already have very tight rental markets and very low vacancy rates. It's still a landlord's market across Australia. And I think that exodus of investors is obviously going to have a detrimental impact overall on vacancy rates.
Budget papers estimate the reforms are likely to have a small impact on rents, adding less than $2 a week to the current median rental price. The government says these tax changes are all about intergenerational fairness. It says it's working with the states to support renters, and the reforms will help 75,000 more Australians get a foot on the property ladder over the next 10 years.
Well, will the Treasurer sign that one in blood? Because, I mean, who knows, right?
For Liam Walsh and his family, every measure counts in the pursuit of home ownership.
I have a 22-year-old daughter and I want her to buy a house. And right now, she can't.
A budget with the promise now of levelling the playing field for first home buyers to realise the dream of home ownership.
Sold. Congratulations and well bought to you, folks.